So let's have a look at Tesla for a second, because what it looks like, and this is just looking at the the chart patterns and the technicals, and we just looked at what the move from the kind of the pre-COVID days up to the peak and run up was, and then we looked at the declines from peak, and then looked at the year-to-date moves. But what it looks like, and there have been some items like Peloton and Palantir, which are out of the fund now, so they've been sold out after big drawdowns. But it looks like Tesla is really the driver, or has been the driver behind this ETF. And at one stage, Tesla comprised well over 11% of the holding within this ETF on a position basis. And the run-up that Tesla had probably was responsible for the success of ARKK, and then the profits from Tesla plus the inflows during the run-up stage in 2020 resulted in a lot of those other positions being bought. There were some successes in 2020, so 2020 definitely was a very good year for ARKK. But then, if you look at the makeup, technology and biotechs, and then you look at how many of these stocks are actually quality in terms of earnings and other fundamentals, what you find is that most of these are very speculative positions, and a lot of them don't have earnings. So and because they're highly valued, high spec, no earnings, and they're very sensitive to inflation, that's why these stocks have been killed. And as a result, the ARKK ETF itself has performed poorly. If there's a bright spot in this at this stage, it's really, I mean, there are a couple of stocks that have held up better than the others. So PagerDuty, PD, Tesla, and the one that's up for the year, SGFY. But even this one is the number quite not there yet. So, and if you had just bought the QQQ, let's do that comparison, see what that looks like. So here we have a comparison of ARKK and QQQ. So QQQ is the green line, and ARKK is this red one here. So we can see, starting at pretty much the same point pre-COVID, that in the in 2020, when QE was in full flight, ARKK did exceptionally well. It handsomely outperforms the Qs, which is the representation ETF for the NASDAQ 100 stocks. But you can see that the Qs remain pretty steady in their incline. And then as ARKK tops at the beginning of 2021, this starts coming down, and then the outperformance of the ARKK starts to narrow. Still looking good as of late 2021, but as we enter 2022 and we start to hit the top of the market, the Qs have outperformed the ARKK ETF, and that performance is pretty noticeable here. Obviously, if you use stop losses and other mechanisms, and you were able to get out on the trend break of the ARKK and kept that money, you'd have done better. But certainly, ARKK did outperform the Qs for a period, mostly during 2020. That's the time frame we're looking at. And then it started to stabilize, the performance gap narrowed, and then since the beginning of this year, it's reversed. So the Qs are now been outperforming ARKK. And had you put your money in into both funds, say 50-50, then you would be up in the Qs, and we can see that the ARKK has basically given back everything. Okay, so that wraps it up for the review of ARKK. If you're interested and want to leave a comment about some of the holdings within ARKK, I can take a deeper look at some of those and maybe just do a separate video on those. So if you want to put the ticker in the comments at some point, I will review that and maybe come back with a video just looking at that one, those individual stocks. Maybe I'll take the top couple of recommendations. Thanks for listening. Have a great weekend. Bye.